In 2008, though, specifically, the US was going through a very difficult time.
Yeah.
You know, unemployment in the US was like insane. There were literally robberies happening where my parents lived. And when we came to India, we didn't see any of that. India was like this oasis. You know, it was like everything was booming. You know, the first few years, frankly, were very slow. There were days when I would ask myself, like you said, like, why am I doing this in India? I could be in the US.
Yeah.
Like we started seeing Robinhood, you know, we're like, man, they can open up an account online on their phone. And here I was like opening up an account, like 30 pages of documents, you know, people from like, you know, Kolkata couriering us forms to Bombay to open up an account. It was very painful. But I think all this changed in 2016 when Aadhaar enabled everything. These next 30 years are going to be incredibly glorious for the country. You know, I think the most amazing economic growth story of our times is probably the Indian growth story. If I could pick any place in the world to be an entrepreneur, especially fintech entrepreneur, it would be India.
Hi, this is Siddharth Aluwalia and welcome to The Neon Show. This episode's guest is the CEO of India's fastest growing investment platform. The idea for the company came after his previous business failed due to the market crash in the US in 2008, causing him to pivot to India. He wanted to provide an investment opportunity platform to retail traders and investors in India. This concept has now been transformed into a 30,000 crore company as of today. A warm welcome to Upstox founder Ravi Kumar on The Neon Show. I would also like to thank our sponsors, Prime Venture Partners, for sponsoring The Neon Show. Hope you enjoy it. Welcome to The Neon Show. This is Siddharth Aluwalia. I have with me Ravi, co-founder and CEO of Upstox. Ravi, welcome to the podcast.
Good to meet you, Siddharth.
Ravi, you have a very interesting journey, right? You came back to India in 2008, started Upstox, and you waited patiently till the Aadhaar moment hit, right? From 2012, you founded the Upstox. 2016 is when the exponential growth started. And I think the three large players in this industry are of, stock trading and stock investing completely online. The first one is Zerodha, second one is you, and third is Grow. And each one is growing phenomenally well. Each year, I think each one is growing like 40-50% at least every year. You guys have crossed 1,000 crores in yearly revenue. Zerodha crossed that milestone a few years back. Right. I think Grow is also touching that milestone. So what do you think, right? Is the reason that a single market can accommodate so many players?
Yeah. We get asked this all the time. I think a lot more, I would say. Right. I think this is not just even a 3-player market. Like I'm from the US, the US has had an incredible growth journey of its own over the past 30, 40, 50 years. And there are many players of, huge size. Yeah. They each have multiple $1 trillion of AUM. I think in our industry also, the relationship is with the customer, and what I mean by that is there's not really so much economies of scale. So it's important that we focus on the customer. And as India's equity participation really comes of age, we stand to benefit from that, like others will as well, right? And I think each of us have an edge that we kind of provide. We each have a different type of differentiation that we provide. And I think all of our jobs, as combined is just to increase equity participation. It's at around 6% right now. How do we get that to 15, 20, 25, 30% is, I think why we exist.
So India has crossed like 100 million retail stock brokerage accounts today or not?
I think the number of demat accounts is a little bit less than that. I think it's just shy of 80 million, if I'm not mistaken.
Okay.
I could be wrong actually a little bit, but about that. Some of them will be duplicates, but we still have long ways to go, right? And I think this number has grown tremendously due to multiple reasons, but the biggest factor was Aadhaar enablement, Aadhaar-based enablement, specifically e-sign and eKYC really allowed people from across the country to open up an account through their phone for the first time. Before that, opening up an account for any brokerage in India was a cumbersome 25-page document. So before Aadhaar, before 2016, if you want to open up an account, you would have to literally print out 25-page document, sign 25 times, and courier it to our single lonely office in Mumbai. Where, because if you missed some signature, we get rejected and you'd be pissed off. And you'd have to repeat the whole process again, So we were the first broker to digitize when Aadhaar launched. And that same month, we went from opening up like 200 accounts a month to opening up 1,000 accounts a month, right? And it's been an incredible journey since. So Aadhaar was a huge enabler. internet penetration was a huge enabler that allowed people from across the country who in the past had to have a branch in their local hometown to open up an account, all of a sudden be able to open up an account on their phone. Like COVID also had some sort of a tail, some sort of an effect as well on our business. I think all these factors combined has really allowed the industry to grow. And I think especially young people, India is such a young country, young people are realizing that, India has this fantastic growth story, right? They're seeing all these companies that are growing at incredible rates. They're seeing Nifty and Sensex, crossing new milestones year on year, month on month, quarter on quarter. And they're realizing that their money can go further for them. So instead of putting their savings account, the money in the, it's a bank account, they can invest it, right? Which is very powerful. So, people are coming to us, without even us having to teach them or tell them anything, how do I invest my money? How do I participate in the growth of the Indian stock market? And
so I get that, right? The retail participation today is 80 million demat accounts. And I think within a few years, we might touch 200 or 300 million.
It's not, exactly. It's a matter of time.
It's a matter of time.
Yeah.
And right now, how many of those demat accounts are opened on Upstox?
So out of the entire base of 80 odd million, I think there is, Upstox is about 11 million customers.
Wow. You almost own more than 10% of the market today.
Yeah, correct. And of course, I'm not saying all of them are active, at any given point in time, but we open up a lot of accounts. And I think, the journey is just getting started, right? We think that India is a huge addressable massive, folks that save a lot. India has a very high household savings rate. About 30 to 35% of households save around the country. And our job is to just channel those savings into high growth assets like, equity mutual funds and stocks.
Yeah. And how many would Zerodha and Grow own today out of that 80 million?
I don't know their numbers, but I think all of us are roughly in the similar zip code.
Okay.
Right. Very similar. I think I don't know. I wouldn't know their exact numbers.
But roughly,
like all of us, I think would be sub 15 million.
Okay. And this is an industry which has taken the online brokerages have taken offline brokerages in a very small period of time. Let's say last 7 years only.
Yeah.
Right. So today, as you said, right, more than 40 million of those accounts would be opened between the three of you, I assume.
Yeah. Maybe even more, and it's not just us three, right? There's also, a couple traditional brokerages that have made the leap into digital.
ICICI or HDFCs.
Not those guys, but there's other independent players, non-banking players that have done it. I think, I think digital players are obviously garnering a large chunk of the new accounts that are turning online.
And Ravi, how much is the volume that trades on the Indian stock market between Bombay Stock Exchange and National Stock Exchange?
So the NSE has garnered an increasingly larger market share. The two big segments there's three segments in India. One is the cash equity markets. Of that, I think NSE does like 90%. There's the futures and options equity markets, the derivative markets. Of that, NSE in the past has had like a 99% market share, but the BSE is now starting to make some significant inroads as literally as of the past month. So, we're very hopeful, that they'll be able to turn that ship around. Then there's a commodity segment, where each of these exchanges have their own kind of commodities exchanges and it's kind of spread. And then there's a whole mutual funds side where BSE actually does very well. So that's the way it's split. And of this, right, it's not like all of this volume is coming from like retail at all. I think retail, from the latest numbers I know, is about 20%. In fact, in the world of like futures and options trading, derivatives trading, the majority comes from what's called co-location, which is the exchanges have their own data centers where a lot of these, big prop trading firms set up shop. And, so in the NSE co-location side, for example, may have like 150, 200 different customers, but these guys do 50% of all of NSE F&O's volumes and a significant amount of cash as well. So a big chunk comes from there. Then there's institutional players, that are either foreign players or domestic players. Like LIC itself, as you can imagine, probably has significant buying and selling of shares, right? So they do all that. So there's foreign institutions, domestic institutions, retail, which I think contributes about 18 to 20%. That's the rough kind of breakup.
And how has this market been growing, like for the last 10 years? Because you have been a participant in this market for 10 years.
Yeah. So I think, the cash volumes are generally somewhat correlated with how the index kind of performs, and again, retail is only a small portion of this, right? It's a sub 20%. Of course, that itself has grown. So when we first came to India in like 2008-ish, equity participation in India, which is basically the number of people in India that have demat accounts, was like sub 2%. In 2012, when we started the retail business, was again sub 2%. In 2016, before Aadhaar launch, it was still sub 2%.
Okay.
And now
no growth.
Zero, pretty much almost like flattish growth, and now we're at a 6 percentage kind of a number. So it's almost tripled, right, in the past few years, which is incredible. But we still have very, very long ways to go. So in this time frame, it's not just retail; it's also picked up. Institutional volumes have also gone up. Companies like LIC have also started upping their buys on the stock market. So all these, everyone's volumes kind of picked up, right? And retail share itself has also grown, and it still. But what I'm trying to say is, it still has long ways to go.
And how many large cap, mid cap, and small cap stocks would be there? And what is your understanding of these three kind of stocks?
Yeah, I wouldn't know the exact breakup off the top of my head.
Yeah.
But if you look at, say, like Nifty 50 is obviously the 50 most highest market cap stocks.
Yeah.
Sensex is composed of the top 30 stocks. I would say anything in the top 100 is like largely large cap. They command a large share of market cap because those companies are generally the biggest. Then there's mid cap and there's small cap. The BSE traditionally also has more stocks. I think around 2,000 odd stocks trade on the NSE. And BSE will have a lot more than that because they also have a large proportion of smaller cap and like micro cap stocks almost. And of course, some of these small caps eventually become mid caps. And as they go through their own journey, they become large caps too, perhaps, right? So we've seen that evolution, and it's been very exciting to see that.
And you as Upstox are only catering right now to retail investors.
Yes, sir.
Right?
Yeah. Our business is, completely mass retail. It's not even like, upper affluent retail or something like that. It's literally mass retail. 95% of our accounts are, coming from tier 2, tier 3 India. 90% plus of our accounts are first-time investors, meaning they've never opened up a demat account before. Upstox is their first platform of choice for opening up a demat account. And that has not always been the case, by the way.
Yeah.
So again, before Aadhaar, right, it was much more of a metro story. Not just us, but pretty much every brokerage out there was opening up accounts where they had a physical presence, or you can open up an account via courier or something like that. Then once digitization happened, Aadhaar opened up the floodgates, and internet penetration did its magic. We started seeing a huge upsurge from tier 2, tier 3 India, which is again where the growth going forward is also going to come from. So as we, go from 6% equity participation to 10, 15, 20, a large portion of this growth is going to come from the smaller towns, right? And younger people that are joining. They're starting their journey in investing in the equity markets.
So if I had to say, right, where is majority of your new accounts coming right now? What would you say? Which demography of India? Let's say which part, north, south, and what is the age group that they are coming from?
Yeah, it's actually pretty diverse. Like people think that, for example, certain communities in India are more affluent towards investing or trading traditionally. So wahan se aayega, aisa kuch nahi hai. I think it's very, very wide ranging. We get it not fully equal, but of course, like most of it will come from, the metro plus kind of cities. Not most, but like the, Maharashtra will constitute, a large chunk of our accounts. But it's basically, basis population is where we're getting accounts. And every year it gets even more spread out, right? Like 4 or 5 years ago, it could have been that we had most of our accounts coming from, say, tier 2. Now most accounts are coming from tier 3, for example, right? So that's very encouraging to see. And I think almost year on year, the average age of an account also keeps dropping, right? So we're like at sub 26 years of age now as an average, account being opened at
So you're
Upstox.
seeing two major trends, right? A tier 3 account is coming up more, and the tier 3 account also the age is less than 26.
Yeah, exactly. Sorry, it's less than 28, not 26, 28.
Okay.
Yeah.
That's a very interesting stat. That means that kind of a youth has a disposable income to invest in stocks.
And so the thing about India is that, traditionally India has been a very savings rich country.
Yeah.
We have an over 35% household savings rate in India. And people generally invest in things like, gold or, physical real estate, or, they'll keep their money parked in the bank for whatever reason. And those assets, are not the best at beating inflation and investing for the future. So what we're actually doing is channeling. In other countries, people don't even save. The business there is like teach people to save. And when you teach people to save, tell them to invest in, say, the stock markets. Here, people already inherently save, but you have to we're kind of telling people like, please don't keep your money in in your bank account where it's not even beating inflation, for example. But investing in something like a low cost ETF is probably way better for you long term, right? So the concept of saving already exists in India. It's just about channeling those savings into better products.
So India has traditionally been a country which has invested in fixed deposits, right? 7%, 8% interest rate.
Yeah.
So why has that been?
Why has that been like that?
Yeah.
Well, because it's a safe haven, right? I mean,
And why do Indians prefer safe haven with respect to other countries?
I think part of it is also the safety net that India has perhaps in the past not had as much of. Like in the US, you have this thing called the 401k. You have very high levels of pension funds, et cetera, et cetera. It's a big social safety net, right? Which perhaps is starting to come up in India now, more and more. Employers are starting to do it. But I think historically it lacked that. And because of that, people wanted to save for a rainy day.
Yeah.
And bank fixed deposits, or like you go to the bank, they'll cross-sell you, keep your money in a fixed deposit, guaranteed 6%, return. So you get excited and you sign up, but it's not even beating inflation, right? These interest rates are linked to ultimately inflation numbers, and it's not even beating inflation. So people are getting smart now. They're realizing that, the same 10 rupees now is not worth as much. So how do I beat inflation? Then the next step is you invest in equity markets.
And right now the youth is changing, right? They're tilting towards that. So this generation definitely
huge
is not putting money in their FDs.
No, yeah, exactly. And it's, we've been so impressed by this, like people think that, of course, there's an education awareness building initiative that we do at Upstox as well. But we've been just so amazed by young people, like getting younger and younger year on year. Like when you go to a college now and you give a lecture, right? What should have been a 2.5-hour lecture ends up being a 6-hour lecture. This happens all the time to us. We'll have 250 students in a room. We do this thing called Uplearn seminars.
Okay.
And we go to colleges around the country and we give like supposed to be a 3-hour lecture. Ends up being a 4.5, 5-hour, 6-hour lecture. Because, all these young folks are asking us all these very interesting questions. It's like, so the questions are not now like, what is a stock market, or why should I invest in the stock market? It's more like, how do I get started? What's a better asset class for me to invest in? Should I invest in a large cap fund, actively managed fund? Should I buy into a low cost ETF? Like, samne se questions about that. So it's been very exciting to see that, and there's a much deeper level of understanding now. That Indian markets are growing, stock markets are like extremely exciting long term. It's benefiting the country, and it can benefit you as well.
And if you have to say, right, when you started in 2012, how many IPOs were happening in that year in India, and how many are happening now?
Well, right now is not the season for IPOs, but super short term. But obviously the past few years, obviously we've seen a huge upsurge in IPOs, and I don't know, man. When we first started, like very rarely, I think, and they're very traditional companies, like some family-owned enterprise that would all of a sudden want to go list. Would be the kind of companies you would hear. Past 2-3 years have seen a lot of digital companies, of course, listing. I think we'll see more of that going forward, right? So it's not just the traditional outfits, but it's also digital native businesses that are going to the public markets for fundraising. And again, look, we're like huge believers in India growth story, right? So as India today has, about $3.5 trillion of publicly traded market cap. And we think that in these next 10, 15, 20 years, that number could be like $15 trillion. So and that number is not going to just come from existing companies getting bigger and bigger, which will also happen, but it'll also be from new age companies listing, right? It's going to be a combination of everything. So we're very excited by this future, and hopefully, we have the privilege of playing some role in making all that happen.
And in your opinion, right, you have seen it historically on your platform, which kind of companies, when they do IPO, get the most interest from the Indian retail market? Like, what could be the valuation?
Yeah, I mean, I think it's been pretty diverse. People thought that maybe, new age companies listing would get a lot of interest. Of course, that's the case, right? Like some of these brands have fantastic brand following, right? Digital companies. But, I remember when DMart listed, it was huge, right? Like people love that company. So I think it all comes down to how the business is run, the reputation of the business, the fundamentals of that business. And you also live in an age now where like research is available at your fingertips, right? So you get a lot of insight on how, a stock, how companies' fundamentals are before you think about investing in it. So I think the interest is very wide ranging. People appreciate the quality of the entrepreneur, the quality of the founding group, the promoter group. And, all that also, of course, plays in. So it's less about the type of business, but more about, who's behind that business and the history of that business so far. That's kind of, that kind of matters.
So the founder plays a very important role when a company lists, right?
Of course. Yeah. Right. The founders, the promoters, and the legacy of that business, right? What's that company been up to? It's not like you don't list until you've been around for whatever, 7, 8, 9, 10 years plus, right? So you already have enough history. Yeah. And in today's, digital day and age, you can find out every possible nugget of information about a company. So there's a lot of transparency, which is great, right? And it allows people to make the best decision for themselves.
So if you have to advise an entrepreneur to list on a NSE or BSE today, and for example, let's say a company is profitable like you, right? What would be your advice on at what revenue, what valuation to list on these stock exchanges?
Yeah. So I think like historically, right? If you look at, I can tell you about the US. So look at Amazon, right?
Yeah.
Or like a Facebook. When an Amazon or Facebook went public, they were not making that much revenue, right? Like I think maybe 250 million or something like that is when they probably went public, because of course the private markets were not at the same levels as they are today, right? The depth was not there. Then, big private equity outfits came in, VC funds and PE funds came in to start investing into companies and allowed them to basically remain private for much, much, much longer. But I think, going forward, I think you'll see a shift back to how it was, is my belief. People, like we want to list at some point because we exist because of stock markets. Yeah. And we like the idea of going public. And I think
you like to give your customers a pie of
exactly
your ownership.
We think we're building something great. We'd love other people to also invest in that story, but also brings transparency. Like we're in the business of generating trust. So going public to me means I am comfortable, being held to a higher standard of governance, and that's helpful for the business as well. So that's one reason. But I think because perhaps there will be some, I think VC funds and PE funds, of course, all stuff is cyclical, but I think we'll see a reemergence of companies listing when they're not like, in $1 billion of revenue, for example.
Let's talk in terms of INR, because we are talking for Indian retail investors.
Oh, sorry. Correct. So when a company in the past, like when, something like an Amazon or Facebook went public, they probably were doing, like 2,000 crores of revenue.
Okay.
With some decent profit before they listed, 2,000, 3,000, 4,000 crores of revenue. Then because all these VC funds started deploying capital and allowed large chunks of capital. So if you're a company that was doing like, I don't know, like 300 crores in revenue, you could raise like 3,000 crores of capital. Yeah. There's many companies that did this, which allowed you to remain private longer, which means you don't have to list for much, much, much longer, which means that the companies that ended up going public were doing, revenues of thousands of crores before they went public. But I think now the trend is reversing, where you'll start seeing companies going public when they maybe hit 1,000 crores revenue or 1,500 crores revenue, et cetera, et cetera. I think people also care more about the profitability of those businesses. You can't sell people on a dream. You have to sell people on actual unit economics and actual business fundamentals, which are all very healthy, right? These are all good things. So again, I think a lot of this stuff is fast moving, change happening in front of us.
So
Very
Indian
exciting to
retail
see.
has always valued profitable companies, whereas
Yeah.
US is completely 180-degree opposite. You can list being unprofitable company, and still many listed companies are unprofitable in the US.
Yeah.
Why do you think a difference in mindset?
Because of companies like Amazon, right? Like companies like Amazon basically remained unprofitable for a very, very, very long time, and they used their logic was we want to grow the market. We want to do more and more and more and more and more, and we can think about profits later. And their stock just kept multiplying. So I think because of companies like Amazon and others, that have shown that sometimes grabbing market share is more important than shooting for profits. I think it led to, everyone trying that, perhaps.
Yeah.
And everyone shouldn't be trying for that, right? And that resulted in maybe, different types of companies, trying to just for the sake of revenue growth or market share capture, just thinking it will remain unprofitable forever. And unfortunately, that builds a lot of bad habits, right? So I think, again, every founder won't have the maturity, I think, to be able to run, an operation unprofitably and still at some point become profitable. The knowledge and the know-how of doing that is very difficult. So, yeah.
Ravi, now I want to focus on your personal journey, right? So it's very counterintuitive. You lived your life mostly outside of India till 2008, right? How did you get so much insights about what Indian retail investors want?
Yeah, I don't think, we really knew that we would be opening up a retail brokerage when we were kids or whatever. But no, I grew up, I'll tell you my story briefly, right? So I was born in Jabalpur, Madhya Pradesh. And my dad was an IIT Delhi PhD. So at the age of 4, he moved the whole family to France. So my brother and I, we grew up.
So you are two kids only.
Yeah, my younger brother Raghu and me, and we grew up in France. So I was there from 4 to like 9 or 10 or something.
Yeah.
Then we moved to Canada, Ottawa, Canada.
Before we proceed, you know French now?
I know French, yeah. Wow. I mean, I don't speak it so much now, but up until 3rd grade, I only spoke French. And like we lived in a city called Lyon, where they didn't even speak English. Okay. So that was one of the reasons my mom pressured my dad to get out of France, because she wanted her kids to learn English. Yeah. So like if our neighbor said hello, I wouldn't even know what that meant. So my dad got a job in Ottawa, Canada, and family moved there. I was there for 8 years, up until senior high school. Then the whole family moved to Southern California. So that was a huge opening, in terms of, and look, growing up, I think, our dad has, we don't come from a business family or anything like that. But our dad's always told my brother and me to really get into entrepreneurship and kind of, be the master of our own destiny, so to speak. So, I started investing in stocks like in middle school,
Like at what age?
Like when I was 12, 13 years old, I think.
You didn't have your broking account?
No. My parents' money, but my parents, again, were so kind to even let us use their money, to kind of invest, just learn, right? But then, I went to college, I went to university in Southern California. I tried to do a couple of startups while I was in university. I took 6 years to get out of, school, because I would just keep starting companies, so.
So your bachelor took 6 years?
6 years, yeah.
From 18 to 24?
Yeah, exactly. Something like that.
Okay.
Yeah. 18 to 23 and a half, 24. More than 6 years, 6 years and a quarter, I think.
Okay.
I got a degree in computer science, but I started 3 companies that all failed. But I learned a lot, right?
Yeah.
Then my parents moved to Chicago. So I went out there, and then I worked at a company called Thinkorswim, which was an online options trading platform. worked there for about a year and a half, 2 years. Then my younger brother Raghu got out of university with a degree in actuarial science, which is like applied mathematics. And my brother and I, we started just trading. So we started a high frequency trading operation where we took about $20,000-$30,000 in savings and turned it into like $2.5-3 million for the course of 2 years.
Can you tell us how to do it?
I mean, we would trade what's called news, economic news. So like when news came out of some countries, we would be able to, buy into things like, Forex and different types of futures products in a very low latency way. So my brother was the quant, he was a kind of the quant brains behind all that. And I was a programmer and the business mind kind of around all that. And we did very well, right? We were very young, and it was an amazing learning experience.
To have $3.5 million at the age of 25, 26 is like liberating.
Yeah, exactly. I mean, it was very stressful at that time. We were, of course, very grateful, but it was nonstop work, man. We were basically like up at any given hours of the night or to the day. And, but it was an amazing time. We learned so much as well. Like more than the money we made is also the learning experience we went through was incredible. Then the 2007, 2008, market crash happened.
Did you lose any money in that out of the 3.5?
No, luckily we didn't, my brother Raghu was actually very instrumental in this. He recognized that a lot of weird things were happening in the markets and we pulled out all of our capital. And we were luckily, we didn't lose anything. And within like 10, 15 days, I remember everything just exploding essentially. But we grew up and we would visit India, growing up. I think our parents did a great job of just, keeping us in touch with Indian culture and stuff. So every couple of years we'd be these NRI kids that would come and, make the rounds across all of our.
And your parents are from which city?
So originally from the South, we're Tamil, but my mom grew up 100% pretty much in Madhya Pradesh.
Okay.
And my dad mostly grew up in Delhi. So like my parents mostly speak Hindi, amongst themselves, but they would speak to us in Tamil growing up. But we've always had this kind of connect with India. We've learned like classical music and stuff growing up. And then, but we hadn't seen India, visited, family in like 10 years because we were working so much and going to school. So then in 2009, when the opportunity came, 2008, we came to India, to visit.
What was the India shining story that attracted you to India? Because US was also like growing. It's not like all these companies, Uber, Airbnb, and the other giants like Coinbase came after 2008.
In 2008, though, specifically, the US was going through a very difficult time. Unemployment in the US was like insane. There were literally robberies happening where my parents lived. And when we came to India, we didn't see any of that. India was like this oasis, it was like, everything was booming, so we were like, why don't we come here and see what we can do?
Maybe you were in the rich neighborhoods of India.
Not at all.
You hadn't seen the slums of Bombay in the Dharavis.
No. We were, in Jabalpur, Madhya Pradesh. And, my mama took us to this sub-broker's office of a big brokerage house. And we saw so much activity in that room that we decided, why don't we attempt doing some of this? And that's when we came to India. But the first few years we were not doing, retail brokerage. We were doing, one of the first people to get direct market access on the exchanges. We got our brokerage licenses over time. We were doing proprietary trading, which basically means trading your own capital. Srini, our third co-founder, also joined at that time. And, 3 of us were working out of a bedroom, a house. And within a couple of years, we were one of the largest, direct market access participants in the country.
So you would have invested the $3.5 million that you made. And how much did you convert that into using the direct market access?
I don't have the exact numbers, but, we probably multiplied it, a few times. But then we also started spending on our retail operation. So retail operation, began in 2012.
Okay.
And, we started basically.
Until then, you were just trading your own money.
Yeah. Until then, we were trading our own money.
So probably you would have made 3.5 into a $10 million corpus.
Maybe something like that.
Yeah.
I should probably do this calculation for my own benefit. But yeah, we basically stopped our proprietary trading operation in 2000. I want to say like 14 or something like that. It became too competitive. So, but luckily we had the retail business, that we started in 2012. And, the first few years, frankly, were very slow. There were days when I would ask myself, like you said, like, why am I doing this in India? I could be in the US.
Yeah.
Like we started seeing Robinhood, You're like, man, they can open up an account online on their phone.
Yeah.
And here I was like opening up an account, like 30 pages of documents, people from like, Kolkata couriering us forms to Bombay to open up an account. It was very painful. But I think all this changed in 2016 when Aadhaar, became enabled everything. And all of a sudden we went from opening like 200 accounts a month to opening up 1,000 accounts a month, and it's been an incredible journey ever since.
And how did, because the poster boy for your industry is Zerodha, right?
Yeah.
Right.
Yeah, they started the whole thing.
Which is great because you have somebody who is co-educating along with you.
Yeah.
Right. And the Kamath brothers do a really good job in PR.
Yeah, they're great. They've done a lot for the industry. I think a lot of us owe it to, what they've done.
Yes.
And we have like immense respect, for what they've done for not just for, our industry, but also just startups overall.
Yes.
Right. The fact they've been able to bootstrap, become such a profitable business itself, incredible to see, and it's inspiring.
So by 2016, when you raised your first 4 million from Kalari, you would also be a profitable business, I assume, right?
Yes. So we've always had, very good unit economics. This business generally does.
Because you make like 20 rupees per trade?
Correct. Right. And it just kept scaling.
Yeah.
Right. And then we were profitable for quite a while, actually, and then we started spending more on growth. Once we raised the next round from Tiger, and then we sponsored IPL, which has been a fantastic journey. Right. So we became unprofitable for a little while, but we grew like revenue a lot significantly and a number of accounts significantly. Right. And now we're profitable again. So we've been able to, I think our business is also in one of those places where if you want to become profitable, you can just stop spending on growth activities and you'll still grow, right? But not maybe as aggressively.
Yeah.
But you can all of a sudden turn it into becoming like a 25-30% PAT business. So,
which you aim to be by next year.
We're pretty much already that.
Okay.
Right. We're already, almost there. But yeah, by the end of the FY24, I think throughout the whole year, we'll probably be like a 25-30% PAT business.
And if you can recall, right, what worked with you or what worked for you in distribution to grow from, let's say, to grow from the first, 1,000 to, let's say, 1 million accounts?
Yeah. So we've had a pretty interesting kind of journey there too. At one point, it was all about partnering with sub-brokers, digital sub-brokers.
Like
someone that say had a website where they would sell different things,
sure,
and advice on different things, and we'd become a partner of choice on the brokerage side, and that became the way we would grow initially. Then online influencers became a thing. We were able to partner there for some growth.
To partner with the likes of Ankur Warikoo and the likes.
Exactly, right. But that also, a lot of it also became unviable as time went on. Then the big breakthrough for us was, getting the rights to IPL and ICC. So we just concluded a 3-year partnership with IPL, which has been an incredible experience for us. Very lucky, grateful to have been able to partner with them.
And if you can recall, right, how much approximately you paid them and what has been the ROI out of it?
No, it's very expensive. Those numbers probably won't be able to share completely.
Sure.
But the way we look at ROI is, we're not a brand that's looking to, be around for the next 4, 5, 6 years. We're looking to be around for the next 50, 100 years.
Yeah.
And the kind of companies that we look up to are like, there's a company called Charles Schwab in the US, which is a 40, 50-year-old institution, and Schwab today has, in a country of 300 million people, Schwab has over 35 million accounts, and they have, in an economy of $23 trillion GDP, Schwab has over $7 trillion in AUM. And that's just one platform. There's Fidelity, there's Vanguard, there's many, players of incredible size that have basically allowed a large part of the American population amass an incredible amount of wealth creation. The U.S. economic growth story is extremely inspiring, right? $100 invested in the S&P 500 in 1990, today is worth over $2,000, which is over 7.5%, 8% annualized. And again, platforms like Schwab and Fidelity have literally allowed hundreds of millions of Americans to benefit from this incredible growth story. The US economy has grown 4 times more than any other developed country in the same time frame. India has actually grown even more than that during this time. And I think these next 30 years are going to be incredibly glorious for the country. I think the most amazing, economic growth story of our times is probably the Indian growth story. These next, like within our lifetimes.
You think it's going to be faster than China?
I think so. The thing about the India that's different than China is, if you look at the MSCI,
what is MSCI? Sorry,
Morgan Stanley something index, I think country index or something index, but it's basically it's a third party Morgan Stanley sponsored entity that measures the growth in every country, right? So what they do is they look at the top traded. From what I remember, they take the top traded stocks of an economy and they put it in an index and they kind of normalize it across countries. So if you look at a country like, say, US, these generally mirror the index of those countries, blue chip index of those countries. So S&P 500 would be closely mirrored to the MSCI USA. India's MSCI would be closely mirroring the Nifty or the Sensex. So US has grown whatever, 7.5%, 8%.
Yeah.
India has grown even more than that, maybe say 9%, 10%. China's has barely grown, right? So China's, I think numbers would be like 1.5%, 2%. And the reason that is the case is because China, of course, has done amazing GDP growth, right? Like hundreds of millions of people in China have come out of poverty these past 20 years, 25 years. But, the way their stock markets kind of work is probably not as transparent as what you'd find in the US and also India, right? I think in India, regulators like SEBI are doing an incredibly great job of just of maintaining transparency, maintaining very high standards of corporate governance, and ultimately, India is also blessed with a very high quality pool of and entrepreneurs, right? And companies, more and more companies are listing with high levels of corporate governance, and they're allowing people to buy into these stories, buy into these IPOs and growth stories, and participate from that wealth generation. That's not the case in a place like China for whatever reason. So MSCI India has done, I think it's one of the top 3 MSCI countries in the world in the past 20, 25 years. And I think going forward over these next 25, 30 years, are probably even more incredible, right? So we're talking potentially, market capitalization from a $3.5 trillion going up to 20, 25, $30 trillion, and hundreds of millions of people, onboarding, and becoming investors and being part of this amazing growth story. So very similar to what's happened in the US is what's going to end up happening in India as well. And we want to just play a role in making that happen.
Yeah. So from an entrepreneur perspective, right, you always maintain the headquarters of Upstox is India, right? Means that's your intention is to list in India at some point in time.
Correct.
Maybe 2,000 crores of revenue or something like that, right? At 300 million in USD. So why do you think India is a perfect market for you to list rather than as US, because that's a much richer market?
So I think it also depends on the type of company you are. Like we are a 100% consumer brand. Yeah. Right? Not even metro consumer, tier 2, tier 3 consumer brand. Our ambition is 100 million customers over these next 5, 6, 7 years. Yeah. And that's going to come from mass India. So the IPO process itself is a marketing process. It's an ability for our own customers to understand the brand, to participate in our own growth story. So if we were to list in another country, you kind of lose that connect, right? So, we're very proud. We exist, to be totally blunt, we exist because of the capital market structures of India. And, it'd be amazing for us to list India as well at some point.
And what do you think different that regulators should do to allow more entrepreneurs like you and me to list in India?
I don't know. I think, talking about the benefits of going public and stuff like that is good. I also don't think it should be too easy. You have to, when a company wants to go public, they'll know, it's not like buying a shoe or, you know what I'm saying? Or like signing up for something else. It's a very profound, calculated decision. And I think, again, I think we've been extremely impressed by SEBI, and all the great work they've done, that they're doing just to protect the retail integrity and of the retail investment population's integrity and stuff like that. So integrity of the ecosystem. So I think, overall, it's already been doing a very good job, and I think more and more regulations are coming in to protect it even more.
There has to be a fine balance between regulation and, being open for new companies to list.
Of course. Like, for example, in India, it was in the past, was very difficult to list if you're a unprofitable business. That's, of course, changed to some extent, right? So you can say that's a welcome rule, right? But I think it's okay, man. If you're a sizable business in India, I mean, you can list. I think the markets are deep enough. There's a lot of excitement, for companies going public. There's also institutional buyers, that are willing to be part of your growth story. So I've never seen that as being a big impediment. In the past, it's because the profitability rule, you could argue that was a big impediment for digital companies, unprofitable digital companies to list. But that's also kind of gone now. So
do you think it's the perfect market for Indian entrepreneurs, for especially digital native entrepreneurs to list in?
Yeah, I think listing is forget listing. I think there's no place in the world, better than India in terms of, I think just being an entrepreneur in India today is an amazing time to be an entrepreneur in India, right? It's like, if I could pick any place in the world to be an entrepreneur, especially fintech entrepreneur, it would be India. If I had the opportunity to pick anywhere in the country, anywhere in the world, I'm saying this place, the rails that are available to you, the addressable market size available to you, the cost of operations, the talent pool that's available to you, the capital pool that's available to you for fundraising, the secondary markets, the primary markets are all just incredible. And it wasn't always like this. In the past, we didn't have the same mechanisms. Like as I was telling you earlier, when we started Upstox, we didn't have Aadhaar based onboarding, for example. UPI was not even there, right? So I think all these things have really helped, the ecosystem.
So except from Aadhaar and UPI, what's changed for you as an entrepreneur? Why you were saying that 2023 is the best time to be an entrepreneur in India? Because you started as an entrepreneur here 15 years ago.
Yeah. I think also it's the confidence. Like I think, see, as a business, what do you want? You want a large addressable market size. You want pools of capital that you can fundraise from. You want a talent base that you can hire from.
Sure.
All these things are there, right? And more, right? There's no country in the world today that's growing at the clip India is growing at. Because of our growth rate, there's so many things that are opening up, like year on year for you. New opportunities are opening up year on year for you. As GDP per capita increases and as more and more people enter the middle class, there's more new business opportunities, that open up. So it's all about, and also we've just seen, the kind of caliber of entrepreneurs that are coming out now is very different than what I would have found, say, 10 years ago in India. The confidence that people have here is amazing. It's even more than what I find when I go to the US, for example. So like, it's like everything is there. Like, what else would you want? Right? I'll ask you the flip question. Like, what else would you possibly ask for?
Sure.
Right? There's deep pools of capital. If you have a great business idea, there's a lot of people that are willing to fund your business, right?
India hasn't seen that kind of scale, I would argue. Just playing a devil's advocate.
Yeah, for sure.
That $10 billion company like US is so easy. It at least looks from the outside to create a $10 billion company because of such deep markets.
Yeah,
right? If your fundamentals are right, right?
Yeah.
And then those $10 billion companies become 100 billion like Coinbase, Airbnb. India hasn't seen the tip of that iceberg even for creating those 10 billion.
Yeah, but I think it's just a journey. If you'd asked me, 5-6 years ago where the startup community would be in India today, I would have not said it. I would have not pictured this right now, right? So, and again, we have a lot of great, deep-pocketed, big fish investors that have supported India, so that's also helped a lot. But if you just kind of think about what's happened these past 5-7 years, and these next 10 years will be like, it could be incredible. And remember, the gems of tomorrow are born today, right? It's like, so you want to be in a place where there's a lot of upside, so to speak. So if you kind of take all this into account, right, you also realize that India is growing, right, faster than any other country in the world. There's just a lot of opportunity here.
So you're saying, let's say today India has more than 100 startup unicorns, companies above 8,000 crore or 1 billion in valuation. That number would roughly touch 1,000 in 10 years? Is that what you?
I would maybe even more.
Okay.
I don't know. I'm extremely bullish, right? So I'm generally like, see, to me, the seed of all this is the quality of the entrepreneurs.
Yeah.
Right? Like, what is the talent pool that you're working with? That's where it starts from. And the kind of talent we have in India is, I think, unprecedented.
And you would say that is even better than US?
Because what's happening also is people are not leaving the country. In the past, all your stars would
all IITians would leave.
I wouldn't even say just IITians. I'm saying stars, right?
Yeah.
Specifically, but yes, generally they've been most IITians, IIMs, whatever. But all the stars would leave the country for better, greener, so-called greener pastures. But those stars are now staying back, right? So if they're staying back, what's going to happen? 5 years from now, those same stars will start companies. They'll employ more and more people. They'll create opportunities for the country to grow. So, and also people are coming back. Some people are also coming back.
You came back.
I'm one of the early people, right? But right. Me and my other founders, we came back, but we're also seeing that trend, right? Of people wanting to return back. So that's the seed, right? If you see that talent, then that means 5-7 years from now, you're going to see a lot of growth. So because we're kind of plugged into the ecosystem, we're seeing that happening. It's just confidence. Ultimately, it's confidence, right? The entrepreneurs of yesterday have been like, they'd be scared to do things perhaps. Now it's just like, let's get up and do it now. That you're seeing that confidence and young entrepreneurs. So it's amazing seeing that.
Thank you so much, Ravi. It's been a wonderful conversation. I would have loved to continue more on it, but you are limited by time.
Thank you, man. It's been fantastic.
It's been a pleasure.
Thank you. Thank you for the time. Thanks.